Great. So we have Clara and Anastasia with us today from Kaiko. Clara, I think, is from the business and strategy side, whereas Anastasia is a little bit more focused on the data and data science side. And we're gonna get a presentation in a few minutes about Kaiko's platform.
Thank you. So my name is Clara. I'm on the business team at Kaiko, and I've been working there for more than 2 years. So I'm really excited to present our data platform today. I also write our research market analysis, so we'll include a link to subscribe to that if you're interested in broader cryptocurrency trends. But thank you very much, Pierre, for hosting us.
My pleasure.
So I'm Anastasia. I'm working as a research and data analyst at Kaiko, and I'm doing some data analysis using Python in order to show our clients how to use our data through different ways and to visualize it also from a research perspective.
Yeah, and feel free to interrupt if you have a question. I notice it's like a small enough group so that it wouldn't be that much of a disruption. So definitely ask away, and we're happy to answer in the middle of the presentation.
Awesome. Thank you, guys.
Cool. So I guess I'll get started first. So I will be presenting cryptocurrency market data and Kaiko's data platform, and Anastasia, halfway through, she'll present more practical use cases and how to actually work with this data after using our API. So again, thank you. I'm excited to be presenting for Crypto Traders International. So before we get into the presentation, the main thing that we want to impress upon you today is that data is really the core of your backtest. Without access to high quality data, you really risk an unprofitable trading strategy. And so many traders, when they first enter cryptocurrency markets, they see free data everywhere. They see it on websites like CoinMarketCap, CryptoCompare. This data can be downloaded. It seems like it's easy. It seems like it's very useful. But at the end of the day, the data that's for free is almost always highly aggregated. You don't really see the individual data points that go into making this data. So that means that it's actually not the best data to use when backtesting a strategy because it doesn't reflect real market conditions. So today I'm going to walk through the different types of market data. So this applies to both traditional financial markets and cryptocurrency markets. And of course, I'll be emphasizing cryptocurrency market data. So just to get started, the three main types of market data, as we define at Kaiko, are aggregates, trades, and order books. So I've created this slide showing least granular to most granular. So we have aggregated data at the least granular, and we have order books at the most granular. So let's first dive into the data. So what is aggregated data? That pretty much means many different things, but aggregated data is either aggregated over a time interval, for example, the average price over, say, 1 hour, or it's aggregated across exchanges or different currency pairs. For example, the average price of Bitcoin aggregated across, say, Binance, Coinbase, Bitstamp, etc. So there are quite a few types of aggregated data. This includes OHLCV, which is open, high, low, close volume. This is like your candlestick charts. You have VWAP, which is volume weighted average price. This is just an average price. You have exchange rates, which is used for currency conversions. You have reference rates, which are used for average like prices of an asset. So there's a huge range of aggregated data out there. And this is what you most commonly see on these price display websites. You'll see usually reference rates for Bitcoin, which is an average price aggregated across a bunch of exchanges. So this data is useful. It's very nice to have. It gives a good overview of the market, but at the end of the day, it's not very granular, and it's very difficult to actually backtest a strategy accurately using aggregated data. So that moves us on the scale of granularity up to trade data. So what trade data is essentially just every executed transaction on an exchange. Say I buy Bitcoin, this will show up as a trade data point, and this would include the amount that I purchased, the price at which I purchased, and the timestamp, and usually the trade direction. So this data is quite useful for backtesting. It shows the tick by tick price changes that happen, and it also gives you a good idea of the average trade sizes and the volumes that are traded. So now we have moved all the way up the scale of granularity to order book data. Order books are really the most granular types of data out there. So what is an order book? It's pretty much a pre-execution list of all of the bids and asks for an asset. And order books contain what are called limit orders, and these are placed by market makers. So they'll place a bunch of bids to buy Bitcoin or asks to sell Bitcoin on either side of the mid price, and this reflects the real-time supply and demand for an asset. So just a good thing to remember, trade data is post-execution and order books are pre-execution. So this is really the underlying supply and demand for an asset. So order book data is definitely the most powerful type of data out there. You can derive quite a few metrics from order books, which give you a good indication of the liquidity of these markets. So now I'm just going to explain a bit deeper what some of these derived order book metrics are, because Anastasia later on, she'll show you how to pull this type of order book data from our API. So the first measure that is most commonly used is the market depth. This is simply the cumulative quantity of all bids and asks at different price levels for an asset. So market depth can be used as an indicator of an asset's overall liquidity. For example, the deeper an order book, the more liquid the asset, the more market makers are providing liquidity for a currency pair. So the second measure is the bid-ask spread. This is simply the difference between the best ask and the best bid. So for most markets, you want a very narrow spread because this means that these markets are quite efficient. They're very liquid. There's a lot of activity on the buy side and the sell side. And then finally, we have price slippage. This is probably the most important for traders. Price slippage is the difference between the expected price of a trade and the actual price level after the trade is executed. So why is price slippage so important? Because let's say you want to buy 50,000 units of Dogecoin. You see that the price is at $1. I don't know if it's actually there. So you place your $50,000 buy order, but oh no, suddenly the price is all the way at $1.50. What happened? Price slippage. Price slippage really gives an indicator of how much liquidity is available on either the bid or ask side. And it's derived from measures like market depth. So these are the three measures that we use. And as traders, you're probably already aware of these measures, but we'll show you what this actually looks like in a data set. So here I have screenshots of Binance's user interface comparing what the data looks like to how it appears in a data set that we provide at Kaiko. And I do this because it's easy to look at a trading interface and see the data go by, but what does this actually look like in a data set? It looks a bit different. They're just files. And at Kaiko, we collect all of this data and we store them in files. So for example, aggregates, right here you have an OHLCV candlestick. So you'll see just the open, high, low, close volume. Almost every charting tool leverages OHLCV data. But what does this look like in a file? Well, it's simply rows divided by timestamps, and you get the open price, the high price, the low price, the close price, and the volume traded. And then trade data, again, you see this on every exchange's user interface. You have the trades. This is what it looks like in a CSV file. And finally, the order book snapshots. This is a little more difficult to collect because we take what are called snapshots. So every minute we'll take 2 order book snapshots, and this would just include all of the bids and asks on order book at the moment of time that the snapshot was taken. For example, you can see this, I took a screenshot of the order book, but translated into a file, it would look a little bit like this, where you would have a list of the bids here and then a list of the asks. So that's what it looks like. And I'm putting this here. I'm not going to get too much into order book data, but really the most powerful data that you want to use is order book. And this enables you to accurately simulate orders that are made. And like my Dogecoin example, if you want to really know how an order that you place will be executed over time, whether at different times of day, whether on different exchanges, then you would have to simulate it using order book data, because that's the only way you're really able to see the actual liquidity of a trading pair at a given moment of time. So I've explained the core data types right now. So I would say if you have any questions on crypto market data, then now feel free to ask, or you can wait until the end. And now I'm going to go into the data platform part of the presentation. So if there are any questions, ask away. And if not, I will continue.
I would have one question regarding the order book data you just mentioned. I think I saw on the website that you guys, and I don't know if you guys are going to go into that later on as well, you have about 1 month of order book data available via the API, or do you have also larger historic data sets?
So we have full history in files, and we have 1 month available through the API. This is simply because it's the biggest data set. They're massive, the order book snapshots. So we provide 1 month through the API, and then say you can buy full history for, say, Binance, and it would be a few years of order book snapshots.
Okay, awesome. Thanks for clarifying.
Great. So now let's talk about crypto markets in general. So there's a problem. I think most people are aware of this. They're extremely fragmented, and there's pretty much no standardization across exchanges. For example, there's different all of the assets have different labels. The data formats are all different. There's even abnormalities in timestamps across exchanges. Data is messy, it's complex, and it's quite expensive. It's a very expensive ecosystem to navigate. So this is where a data provider steps in. The role of a data provider is to connect with all of the exchanges out there. There's currently more than 100 cryptocurrency exchanges. Across these exchanges, there's more than 70,000 live traded instruments. So all of these instruments all have different asset codes. So no two exchanges have the same labeling conventions. And so this requires like an immense amount of work going into pretty much manually standardizing these codes. It's also just time consuming. We have a full engineering team working full time to make sure that our data infrastructure is running properly. And finally, most exchanges actually don't collect their own data. So this means that once the data is gone, then only data providers are the ones that have it, or other individuals who are collecting the data. For example, on Kraken, I'm pretty sure they only provide the previous 1 month of history. Coinbase, I think, only has the previous 1 week of history, and some exchanges don't provide any history through their API. And then finally, again, I said no data standards. And so these are just some of the structural inefficiencies of crypto markets right now, which most people think like, oh, if this data is for free, if it's publicly available, what's the purpose of a data provider? Well, when you actually look at the APIs of all of these exchanges, it's quite a mess, and it takes a huge amount of resources to actually put this together. So that leads to a question that we get all the time. I'm a trader. I want to start trading. I need to backtest. I'm launching a fund. Should I build my data infrastructure, or should I outsource this? So this is a question that I've had to answer a million times to a bunch of funds that have reached out to us. I would say 9 out of 10 times you should probably outsource this. It's a huge task for an engineering team to do. And if you're a fund, you probably don't have the team necessary to create a really robust data infrastructure. And again, a lot of this is because there are just no standards, no norms in the cryptocurrency industry. So data management in crypto is pretty much a 3-step process. It's the collection, it's building these connections to all these exchanges. It's the processing. This is probably the most time-consuming part, which includes normalizing these taxonomies and also normalizing the data formats. And then finally, the organization. So this is how we organize our data sets and make it consumable in databases for our clients. So, and finally, here we are at About Kaiko. So this is what we do. We are a data provider. We collect data from more than 100 exchanges. And here I've listed some of the key exchanges that we collect from. We normalize the data, we store it, and then we deliver it. So the market data API is the most relevant for you guys here, but we also provide CSV files. So if you want just a data set in just a file format, then we can provide that for pretty much all data types. We also have a live stream WebSocket that unifies live stream feeds from all of the exchanges we collect from. And then we're also getting into DeFi. So we have quite a few Oracle projects that we're working on with people in the DeFi industry, and we provide price data feeds on chain. Cool. So now I'm almost done with my part of the presentation, but here I will introduce Kaiko's market data API. So we collect all of this data and we make it accessible through our own centralized API. So from our API, you can access data from more than 100 exchanges. We have, I think at this point, more than 15 endpoints. We have historical data and live data with pretty low latency, and we have it for all data types. For example, we have aggregates, including OHLCV, VWAP, we have exchange rates, we have reference rates, we have order book snapshots, we have price slippage, we have market depth, and bid-ask spreads. So those are the main data types that we have right now. And here I just recorded a little video showing our API documentation. It looks pretty similar to almost all of the exchange API documentations out there, but this is just to give an idea of what a documentation looks like for our API. And we try to match the format of the industry right now. All right, so ready to get started with the data. So I will let Anastasia take over now, and she'll show some examples.
Just a quick second. We have two questions already. First one actually that can be asked now as well is in these aggregates in different data sets from exchanges, do you guys have also data about futures and options and derivatives data?
Yes, absolutely. So we collect market data for all futures and options markets. So we actually just launched our live derivatives product. So these are measures unique to derivatives, which includes like open interest, funding rates. And so we actually have that data now. It's a new API endpoint.
Excellent. Great. Then the second question is if you guys can already disclose which oracles you're currently working with or going to work with.
Yes, so this is public. So we work with Chainlink. We have a partnership with Chainlink and iExec, and I believe we're working on some others. I'm not fully sure though.
Okay, good. I think Chainlink is no surprise. All right, we do have another question here that might be relevant. Do you have also data on coins that are on decentralized exchanges like Uniswap or SushiSwap? So I guess when you guys work with oracles, there might be some.
Yes. So I'm gonna reveal a special secret to you guys. We're launching our Uniswap data next week. And so you guys get the first look at that. But this will be the first DEX that we've integrated with, and we're planning on integrating with many more DEXs in the future.
Wonderful. That's a great update. Thank you. All right. I don't see any other question here. Then I'm gonna go give it over now to Anastasia. Thank you.
All right. Thank you, Clara, for this clear presentation. So as I said, I'm a research and data analyst at Kaiko. That is why on my side, I'm going to present you practically how to get easy access to this data using your private API key, but also how you can interpret and visualize our several endpoints. So for this purpose, I'll use a Jupyter notebook with step-by-step indications that I hope will help you better visualize the possibilities that you get by using our API market data services. So getting access to the data through Python implies that you have a private API key given by Kaiko. The tutorial that I'm going to give you is actually based on a Python wrapper to use Kaiko's data API. This is not an officially maintained by Kaiko repository, and it is accessible through our GitHub. So any contributions are welcomed by any of you. So more precisions on the functions that compose this module are given on our API documentation, and more specifically on the market data API section of this documentation that I have screened here on the right of this slide. So let's get started. Here is the notebook. First, naturally, you begin by importing the package containing the functions that I have previously talked to you about, and that can help you access more easily Kaiko's data. So you just import it like this, but before you have to install this package. And for this, you just have to do a pip install Kaiko like this on your command. I'm not going to do it now because I have already installed it in my computer. But if you want to use our API services through Python on your own computer, you can do it like this. In order to see what kind of data you can access to using this package, you just can discover the list of functions this way. You can see that you can get access to candlesticks data. You can get access to order book aggregations and order book snapshots, as Clara described before, but also to tick by tick data, that is the trades. Most important to begin is to set up your API key. As I said, it's given by Kaiko. It's a private API key. It's one of our main products. And for this, either you create an environment on which you specify your private API key, either you just put your API key here, as it is written really clearly on this notebook, so you can access the data. Now let's get into the most interesting part, that is the data exploration. We'll begin by looking at how to get candlesticks on Python. So candlesticks, as explained by Clara before, are based on OHLCV data. For this, you actually use the function candles from the Kaiko module. In this function, you specify the parameters. The parameters are first, the exchange on which you're interested on. So in this example, I've taken Coinbase since it's a big marketplace. And then you specify the pair that you're interested on. So you can take BTC USDT, you can take BTC USD, you can take any pair that you want, and that is accessible at Kaiko. Here I've taken BTC USD since it's quite a basic example. And you can specify the time range on which you want the data for. So this is from the 10th of February to today. Also, what is interesting with Kaiko's data is that you can have the data on different intervals. So if you want the data on a daily basis, you can just specify here 1 day. On an hourly basis, which is what I'm going to present here, it's 1 hour, or on a minute basis, you just say 1 minute. And you get access to this kind of file that is an OHLCV VWAP and count. So COHLCV VWAP. And this data can help you build this chart. So this is a chart for several days. You can navigate through it and you get access to candlesticks for Coinbase, BTC USD. With OHLCV data, so with the same endpoint here and the same functions, you can also build more interesting stuff like average trade size. What is average trade size? Well, average trade size is computed by just taking the volume and dividing it by the count. And this is interesting to see because here you see you have the volume, you have the count, you just divide for each row of your data frame and you get the average trade size for a certain exchange. So here again, as you see, I have used the same functions, candles, that gives OHLCV data, and on Coinbase for BTC USD on the same time range, and I get access to the average trade size for Coinbase. More interesting would be to compare this across several exchanges in order to compare the markets between them. So let's jump now on another endpoint that is order book snapshots, and more specifically slippage. So price slippage, I think that Clara, you said it before, but it's not bad to say it again. So for those that do not already know, it can be defined as a difference between the expected price of a trade and the price at which the trade is executed. It is calculated by Kaiko and used by most professional traders to measure the potential transaction costs when trading. That is why it could be very interesting to look at through this demo. So for this, I've chosen again a highly liquid BTC USD market to measure how slippage changes not only across exchanges, but also when you switch from an order size to another. Instead of using candles as before, we're going to navigate through order book snapshots in the Kaiko package. Again, you specify the parameters, you take the exchange, you take the pair, you specify the time range, and finally, here, you specify in the end the order size that you want. So we have several order sizes. Here I have chosen to compare 50K, 100K, and 200K. So this is the result that you get. And this is the chart. You can do the same, and this is more interesting, this time by comparing the slippage. So the same function is used here, but across several exchanges. At Kaiko, we don't only have one exchange, as you may have understood. We have many exchanges that cover most of the crypto markets. So here I have compared Coinbase slippage for 50K order size with Bitfinex and with Bitstamp. And this is what the data looks like. So again, you have the slippage for the selected time range, but for each exchange at a time. And you can compare it and compare the different marketplaces and trades costs. An easier, and that's what we actually do in general when we chart slippage, an easier way to visualize slippage is actually expressing it in percentage. So multiplying what you get from our API by 100 and compute the moving average. So here is just the moving average that helps you better visualize the tendencies and compare more properly the exchanges between them. So another metric that is interesting to check using Kaiko's market data is the bid-ask spread. Again, for several exchanges calculated using, again, as you can see here, order book snapshots. So the bid-ask spread is the difference between the best ask and the best bid, and this for an asset. Here, I've compared the bid-ask spread for Bitstamp and for Kraken, again on BTC USD, for a selected time range. So other parameters are optional and can be found on our API documentation, but these are quite sufficient. And from this data store, I have selected the series that interests me, that is the spread and the mid price. So something interesting actually to check when you want to visualize the bid-ask spread is to normalize the spread. So to normalize the spread, the calculation consists of dividing the actual spread that we have on our data by the mid price. So the mid price is also accessible through these endpoints, and you just select the series that will compose your data frame, so spread and mid price, and then you divide one from another, and you get the real spread, what I call here the real spread, on the two exchanges that you have selected. So the real spread on Bitstamp and the real spread on Kraken. So this is a visualization of the of the bid-ask spread. So this is interesting because, again, you can compare the two exchanges. And finally, I'm going to get into the import of depth data. You can get the depth. Here it's 2% depth, but you can get it on several levels. Market depth is actually the sum of both bids and asks placed at a certain level. Here I have chosen again 2%, lever from the mid price. It's taken again from a pair's order book. So generally, the greater the market depth is for a trading pair, the more liquid the market. That is why it's irrelevant again to check market depth of several crypto markets. Here I took the example of Bitstamp and Kraken again, and you can see that you just take the bid volume 2 and the ask volume 2 these are series to compose your data frame. And the bid volume 2, in order to be clear, it's a total volume placed between 0 and minus 2% depth. And the ask volume 2 is the total volume placed between 0 and 2% depth. You sum the two and you get, like here, and you get the market depth for each exchange. So based on what I have said to you about the definition of market depth, you can see that the depth on the market depth on Kraken is higher than the one on Bitstamp for the actual pair. Finally, I'll show you quickly how to travel inside Kaiko's tick-by-tick data. We're not going to use order book snapshots again, since it's trades, as explained Clara before. So we're going to use another functions of Kaiko's module, that is tick trades. Again, same functioning, so it's easy to use. You specify the same kind of parameters, that is the exchange, the pair, and the time range on which you're interested, and you get tick-by-tick data for the instrument that you have selected. So you have a unique ID for each trade. You have the price at which it has been executed and the amount for which it has been executed. And you have the taker side cell, that is the sign of the trade, if it's a bid or if it's an ask. Something fun to do with this kind of data, because I guess it's not that easy to use. It's to compute the signed volume that actually gives you an indication on whether the purchase is a sale or a buy and for which amount it has been done. So signed volume is positive here for purchases and negative for sales. This is for Kraken, and you can visualize it here. That is all for the Python demo of how to get access Kaiko's market data.
Thank you very much as well. So let's see, you guys can ask some questions now. I already have a few. I think I saw a tweet today where you guys compare crypto to equities, or the correlation of certain equity indexes. Are you guys going to plan also providing equity data or stock data in your data feeds?
So that was Anastasia. She pulled that data from Refinitiv, and we use it for research. In terms of the actual granular, like trade and order book data, that's you get that data through traditional data providers like Bloomberg or Refinitiv. And this is like the big difference between the crypto data industry and the institutional traditional finance data industry is probably like the pricing and the licenses, is that it's really designed for enterprises. Like you would have to purchase a Bloomberg terminal or something like that to get full access.
Yeah, we heard that a lot, actually. Some of our members were complaining about the prices in the crypto space, but then when you look at the prices for data in the traditional financial markets, then you can see a very big difference.
Mm-hmm.
Could you talk a little bit about some of the typical analysis you do? I mean, I was looking at some of the things you guys publish on the blog. It would be very interesting, actually, also for members that are more focused on the analysis part, to understand which kind of correlations you guys find in the data you provide.
Yeah, so I just sent actually our newsletter a link to subscribe. So I write our weekly market analysis, and Anastasia helps a lot with the data and the charting. Like how I write it is I pretty much like look at the crypto news over the past week, and I look for trends, and then I see how can I use our data to best depict the trends that we see. I guess some of the more interesting things I've noticed are that average trade sizes are increasing. So this is on almost every single exchange. The average trade size for Bitcoin dollar pairs is increasing, which I'm pretty sure suggests that there are higher volume traders. In short, there are like institutional traders that are trading on these exchanges. And we noticed a huge spike in early January, which of course is when Elon Musk executed his buy order for 1.5 billion. And so and I think today there was actually news that Coinbase helped helped with that order. And so these institutions are really, they're using public order books, which I think is the biggest surprise to a lot of people. It's not going on over the counter, which is what people always thought that institutions were trading on. But no, it's actually these more like order routing across quite a few public order books like Coinbase, Bitstamp, and Kraken.
That's actually quite interesting. Also, I just checked the record day for Binance trading volume was somewhere early January, was $18 billion that went through Binance in terms of dollar value. I remember in 2018, we looked at some of the research papers that were published at the time about price predictions for the crypto market. And I think we found a few ones that were looking at order book data in particular to predict short-term volatility in the market. So I think that's a really good indicator. And also, as you indicated earlier, order book data is massive. And for most people, or people with lower sophisticated data infrastructure, very hard to process.
Yeah, so that's actually why we created the derived order book measures like market depth and spread. So we're taking these massive raw order book snapshots and we're pretty much just aggregating them into like a single number. For example, you would get the bid depth and the ask depth rather than 10,000 individual orders. And so this has proved to be like very useful when it comes to research and actually studying these markets. For example, most like data processing tools aren't powerful enough to work with order book data just on your individual computer. You would need to, like, if you're a quant fund, you're backtesting order book data, you're like renting servers. You can't do it on a desktop.
You also just mentioned average trade size. Are you guys seeing patterns in particular exchanges where the average trading size is, let's say, a little bit larger than on other exchanges?
Yes, of course. So LMAX Digital, they have the biggest trade size by average, by a long shot. And LMAX Digital is, I think, normally just an equities exchange, but they launched a crypto exchange in 2018. So most of their clients actually are institutional clients. So that's interesting to see. Their average trade sizes are, I think, probably 10 times greater than on Binance.
And I hear that a lot of institutions, as you said, just using the normal order book at exchanges. Many institutions work with Coinbase together to purchase their coins. I think some analysts in the industry actually published some on-chain metrics that during the time that Elon Musk was buying, there were a lot of change outflows at Coinbase.
Yeah.
And also Michael Saylor, I think, mentioned that he
used Coinbase too. But so Coinbase has their own order execution services. So they actually use that's like a separate business arm. So they use quite a few exchanges. They're not just using Coinbase's order book. They're using like across the industry.
What was interesting to hear that Michael Saylor, for instance, mentioned how he purchased his first trove of coins was buying in a specific price range in very small order quantities in an algorithmic fashion over a pretty long period of time, just so that the market wouldn't be impacted by a large buy order. For instance, the slippage you guys mentioned earlier.
Yes. And so any large order will always be broken apart. And so that's why the average trade size isn't a perfect indicator of the average trade, but I'm almost positive that these average trades that are broken apart are still bigger than like the average retail trade. So when you see a shift in the average trade size, it indicates that these huge orders are just getting broken apart into like medium orders pretty much. But yes, that's exactly what happens.
Do you manage to identify fake volumes, patterns, fake limit orders put in and removed quickly across different exchanges?
Yep. So fake volume is quite difficult to identify now. It used to be very easy, but the people, I guess, like once I think Bitwise published in a report 2 years ago, just showing how easy it is to identify fake volume. And since then, it's actually become a lot more difficult just because the people doing fake volume, they've improved their methods. Now that when you reveal how it's done, then it no longer works anymore. We're not studying fake volumes, but a lot of our clients are. With order book data, this is particularly hard because you need what's called tick level order book data, which is even more granular than order book snapshots. So tick level order book data includes like every updated bid or ask on an order book. And this is different than like a snapshot, which is just all the bids and asks at time. So if you have tick level data, you can definitely identify trends, sort of fake orders placed, but it's still very complicated. So in short, it's difficult.
You guys provide tick by tick level data. Would that be the part of the real-time data stream that you guys provide and less of the historic? Oh, no, you mentioned tick by tick level order book data would be available also historically.
Yes. So the tick level order book, it's just a different format compared with order book snapshots. It's like the data size it's almost so big you can barely even open a single day on your file on your computer because it's every changed bid or ask. And it's the full information. It's not just like a snapshot in time. So this this is something that most traders don't use at all because it's just too difficult to work with. The most sophisticated quant funds, they're the ones who we provide tick level order books to.
Awesome. Clara and Anastasia, thank you very much for taking the time today. It was very insightful, and we'll definitely let you know about more questions from the community about Kaiko's data platform. Thanks a lot.
Thank you. Bye. Thank you so much. Bye everyone.
Bye.